Okay, here we are, the day after the midterm elections. Today is November the 9th, 2022. It is now 3:05 p.m. Central Time. And we need to take a look and see how the midterms are affecting the mortgage-backed securities and home loan interest rates. We're also going to talk briefly about what to anticipate with the consumer price index that's coming up here. And I want to point something else out to you. I always want to tell you how to kind of listen to the details to really understand what's going on here. So let's jump in and see where the markets are overall. Stock market right now after the midterm elections, down 646 on the Dow, down 79 S&P, down 263 NASDAQ, 2%, 2%, 2%. So the reason I point this out is because overall the stock market isn't really happy with the results of the midterm elections. Now, how did it go? Well, overall it was kind of like not a lot of fireworks, right? It looks like the House is going to go to the Republicans. Not really, a big surprise. We don't know what's going to happen with the Senate. Not really a big surprise. Not a red wave, not a blue wave. So just kind of like a little bit more subdued, I guess, than some people were expecting. But the markets do have an expectation and maybe even a hope sometimes. And overall, looks like the stock market isn't real happy with what they're seeing. The mortgage-backed security world is up 11 basis points. That's good for us. Okay, so we're up 11. Now, earlier in the morning when the market opened, we were down I think like 30 basis points or something like that. I was a little bit concerned thinking, oh no, if we are going to be down 30 or 40 points, that's going to put us convincingly into that 7% range when I was hoping to see us drift further lower into the sixes after the midterm. So we'll talk a little bit more about that in just a minute. The 10-year treasury down 2 basis points, which is good for us as well. We're at 4.103. Really want to see that go down below 4.0. That's just, maybe that's just me. That's my number that I'm shooting for is I want to see it under 4.0 because I think that's a real psychological number for a lot of people on the 10-year. Take a look at the charts, though. This is really telling. We are currently, we broke above the 25-day moving average briefly yesterday. We went above it convincingly today, and we may even close above the 25-day moving average. It's now 3:07 Central Time. And the markets close at 4:07 Central Time. So we have, another 53 minutes left before the markets close for the mortgage-backed securities. Why does that matter? Well, take a look at this 25-day moving average, this brown line, and how long we've been battling it. Okay, so you can see right here a real dogfight trying to get above that 25-day moving average, and we just have not been able to do that. It's just been winning, not allowing us to break above it for now months. So if we can get above it and close above it, and then maybe close above it the following day on Thursday, that would be a real win, especially after the consumer price index report comes out, that I am going to show you right now what we are going to be hoping for and looking for and rooting for on the consumer price index report that is coming out tomorrow. So right now, again, we are above the 25-day moving average, hoping to close above the 25-day moving average. Now, as I jump over to the Brent Bruce Daily to take a look at where we are on the interest rates after the midterm election, I also want to point out just briefly, another report came out that talked about consumer confidence and said that in general, consumer confidence is still very strong. But at the same time, a report just came out that overall consumer debt is at the highest it's ever been in the U.S. history, and that it is growing faster than it has ever grown in the history that they've been recording it. So, you got to look a little further into it. Everyone's happy. Consumers are happy, but yet they're using more debt than they've ever used. I'd like to see it say, hey, consumer confidence is through the roof and overall consumer debt is dropping. I'd like to see that number, but that's not what we're seeing. That's why I want to make sure that I pointed that out, that you got to pay attention to not just one report. You got to pay attention to all of them. So overall, the Brent Bruce Daily yesterday, we were at 6.999 with a credit of about $1,800, if I remember. And we were just waiting and anticipating the midterm elections to see if there were any surprises. Well, there weren't. So here we are. We're at 6.999% with a little bit of a lender credit. A little smaller lender credit than yesterday, but still a lender credit. We can get down to the 6.875% with just a very small cost, $821. So we're in a pretty good position there. I always want to open this up here and show the scenario. That is our scenario for compliance reasons. Now, the last thing I want to talk about is the consumer price index report that is coming out tomorrow. This is potentially another strong market mover. Now, I keep saying that, right? You go, hey, Brent, every day you say this is going to be a big market mover and the interest rates are going to really, run one way or the other. And we sit at that 6.999 for months. Well, I'm glad that we're at 6.999 and not at 7.999, number one. But overall, the reports just keep kind of coming out just like the election did, like just kind of, maybe what people expected and not really a lot of fireworks. Now, tomorrow, what is it that we're looking for in the Consumer Price Index report? I believe the CPI comes out early. I think it comes out at 8:30 a.m. Eastern time, so very early. Could be wrong, but as soon as that report comes out, I will let you know. Now, what are we looking for? This is one of my reports from a few days ago. And you see right here, we are trying to replace October of 2021. We are trying to replace this number. Now, if we want the overall aggregate total of all of these numbers to go down, so these are 12 months, the white ones are the last 12 months. If you add all of those numbers together, that would give you the annual rate of inflation. Okay. Now, this is the core consumer price index, which is excluding food and energy. We talked about that many times in my other reports as well. What we need is a core consumer price index reading on a month-over-month rate of under 0.6. Okay, so as you're learning more and more about how mortgage-backed securities work and inflation and all that, you need to remember that tomorrow we want to hear that month-over-month, not year-over-year, month-over-month, core consumer price index, not headline. There's going to be a headline report and a core report. The core report needs to come in on a month-over-month reading of under 0.6. That is what we all need to hope and pray for tonight. Because if it's under 0.6, that means that in general, the report is going to say that inflation is subsiding. And if inflation begins to subside, it will allow the Federal Reserve to maybe not be so aggressive in not only their monetary policy movements, but in the way that they speak about inflation, as we learned from Jerome Powell last week, that just their words can actually be more impactful than the movements that they make. So they will not have as much rhetoric in their talk if they have some reason to believe that inflation is subsiding. If we see a month-over-month number of more than 0.6, again, we'd be like, we don't like it very much. As a matter of fact, that'll probably be hurtful if we stay at 0.6. But if we get a 0.7 or a 0.8 or something crazy like that, we really might see home loan interest rates jump up quickly. Okay, so be aware that it might hurt us maybe more than it can help us tomorrow. So we want to see a 0.2, a 0.3, a 0.4, maybe a 0.5 on this number tomorrow. If we do, inflation is subsiding, or it's going to show that inflation is subsiding, and it will allow us to prepare. I will say prepare for the first quarter of 2022 for home loan interest rates to begin to convincingly come down. Now, remember, a few weeks ago, I made my projection that we would be at under 5%. I believe I said 4.875% on the Brent Bruce Daily 30-year fixed conventional home loan by the end of the second quarter. All right, so that is a true line in the sand. Now, we need to see some things happen in order for that to actually come true. Tomorrow would be wonderful if the reading for core consumer price index is under 0.6 on a month-over-month number. We will keep you posted. I hope that all makes sense. If not, give me a call, send me a note. Let me know your questions, thoughts, concerns. I'll talk to you tomorrow.